What is going on with the crypto market right now? Is this the dip before the rip, or are we heading into another crypto winter? It feels like every headline is either predicting a massive bull run or a total collapse. It's confusing, I get it. So today, let's cut through the noise, look at the actual data, and figure out what's really happening in the world of crypto. We're going to break down the key factors driving the market, from macroeconomic trends to the latest developments in blockchain tech, so you can get a clearer picture of where we might be heading. First things first, let's talk about the elephant in the room, the macro environment. Interest rates, inflation, global economic uncertainty, these things aren't just for traditional finance anymore. They have a huge impact on crypto. When central banks raise interest rates to fight inflation, like we've seen recently, it makes borrowing money more expensive. This tends to pull money out of riskier assets. And let's be honest, crypto is still seen as a high-risk, high-reward play by many large investors. So, as long as interest rates remain high, we might see a bit of a headwind for the crypto market. It's a classic risk-off sentiment. Investors are seeking safety in bonds and other less volatile assets. We need to keep a close eye on the Federal Reserve's announcements and inflation data. Any sign of a pivot, where they might start lowering rates, could be the rocket fuel the crypto market is waiting for. But it's not all doom and gloom. Let's look at what's happening inside the crypto ecosystem itself, because there are some incredibly bullish signals. The Bitcoin halving just happened. For those who are new, this is a pre-programmed event that cuts the reward for mining new Bitcoin in half. Historically, the year following a halving has been explosive for Bitcoin's price. It's a simple supply and demand equation. If the new supply is cut in half and demand stays the same or increases, the price tends to go up. We haven't seen the dramatic price surge just yet, but these things often take time to play out. The market needs to absorb the new supply dynamic. Many analysts believe the real effects of the halving will start to kick in during the latter half of this year and into the next. Then we have the massive story of the spot Bitcoin ETFs. This was a game changer. For the first time, major traditional finance institutions in the US can offer their clients direct exposure to Bitcoin through a familiar, regulated product. We're talking about billions of dollars in institutional money flowing into the space. This isn't just retail investors like you and me anymore. These are pension funds, asset managers, and corporations. The approval of these ETFs has legitimized Bitcoin in the eyes of Wall Street and has created a new, steady stream of demand. And now, the market is buzzing with speculation about spot Ethereum ETFs. If those get approved, it could open the floodgates for institutional investment into the broader altcoin market, which would be absolutely huge. Speaking of altcoins, what's the deal with them? Right now, we're in a phase where Bitcoin is dominating. This is pretty typical. Usually, capital flows into Bitcoin first, establishing it as the market leader. Then, as Bitcoin's price stabilizes or climbs, investors start to feel more adventurous and rotate their profits into altcoins, hoping for higher returns. This is what we call altcoin season. We've seen some brief flashes of it, with certain narratives like AI tokens, DePion, and real-world assets getting a lot of attention. But a full-blown market-wide altcoin season hasn't really kicked off yet. This could mean we're still early. The key is to watch Bitcoin dominance. That's the percentage of the total crypto market cap that belongs to Bitcoin. When that number starts to drop significantly, it's often a sign that altcoins are about to have their moment in the sun. Now, we also have to consider the regulatory landscape. It's a mixed bag. In some parts of the world, like Dubai and parts of Europe, we're seeing clearer, more crypto-friendly regulations. But in the US, it's still a bit of a Wild West. The SEC has been active, and there's a lot of debate about which digital assets are securities. This uncertainty can definitely spook investors. However, there's a growing push in Washington for clearer legislation. As more and more people and institutions get involved in crypto, the pressure on lawmakers to create a sensible framework increases. Clear rules of the road would be incredibly bullish in the long run, as it would remove a major source of risk and uncertainty for big players. So, to wrap it all up, what's the verdict? The current crypto market is in a fascinating tug-of-war. On one side, you have macroeconomic pressures and regulatory uncertainty pulling it down. On the other side, you have powerful bullish catalysts, like the Bitcoin halving, the influx of institutional money through ETFs, and constant technological innovation pulling it up. We are seeing consolidation, which is a healthy sign. The market is building a strong base of support after a significant run-up. This isn't a straight line up. There will be volatility, there will be dips, and there will be scary headlines. But the underlying fundamentals and the long-term adoption trend look stronger than ever. It's not about timing the market perfectly, but about understanding the different forces at play. This allows you to build a strategy that works for you, whether you're a long-term holder or a more active trader. The key is to stay informed, manage your risk, and keep your eye on the big picture. Thanks for watching, everyone. I hope this breakdown gave you some clarity on the current state of crypto. It's a complex market, but an exciting one. If you found this video helpful, do me a favor and hit that like button and subscribe for more deep dives into the world of crypto. Let me know your thoughts in the comments below. Are you bullish or bearish right now? Stay safe and see you in the next video.